July 25th, 2024. Coming into the day, yesterday was a big bear trend day. And when the prior day is a big trend day, when it's a big bear trend day, there's a 75% chance of at least 2 hours of sideways to up trading starting by the end of the second hour. And if it's a big bull trend day, there's a 75% chance of 2 hours of sideways to down trading starting by the end of the second hour. Additionally, there's a 50% chance. So after a big bear trend day, there's a 50% chance that you get some sort of follow through selling on the open, usually within the first hour or so. And would be what bars 6, 7, and 8 were. It was hard to look to sell because you know that there's going to be 2 hours of sideways to up trading, probably starting by the end of the second hour. And this is already so climactic, this whole channel is, and you're trying to get basically a breakout below it. So it's really hard to believe in this breakout. So bar one, a bear bar, but not quite closing near its low. I think after this, we're most likely going to be in a trading range. You can see we got back to the low of this bar. So the traders who shorted here, they scaled in higher, maybe at the top of the sell climax, and they used the sell off on bar one to buy back their shorts. And that's basically why we bounced in here. It's also, this is something that Al said a while ago. He says if a day is close to 100, if if the range is like 90, 95, it'll sometimes just try to get to 100. And so this might have, essentially been a vacuum test of the market trying to be in a 100-point day. You can see it got a little bit over 100 points. But if the market gets close to 100 points, a lot of times it'll just, basically get there. 100 is a big round number, obviously. So bar two, a failed breakout of the low of the day. There's probably sellers above. It's a lower low double bottom with whichever bar that was. But it's a bear bar, and I don't want to sell, or I don't want to buy above a bear bar. So there's probably sellers not too far above, but you are trading in general expecting a bounce today. Bar three, a bull bar, but a big tail on the top. So the traders who sold above bar two were able to make a scalp if they scaled in higher, maybe around the open of the day during three. And again, it triggers the lower low double bottom, but it's not a very good buy, so no one's really going to take it. Bar four, an inside bar. So a doji bar, an inside bar. What do? I would just wait right now. I don't really think there's anything worth taking, so I would just rather wait and see what happens. We have another inside bar on bar five. So we have consecutive inside bars, bar four and bar five. II patterns on the open are pretty unusual. I have a couple. Oh, there we go. I have a couple examples of them. I kind of like this pattern. It's cool to. It's just unusual, and it's nice when I get to see it on the open because I only have this many examples in a couple of years. So it's a pretty neat pattern. This is just one inside bar, but as you can see, inside patterns can oftentimes lead to big swings, or just inside bars on the open can often lead to big swings. There's one good example. This is an II. You can see we got a strong breakout above and then it failed. There was one other one particularly that I wanted to show. This, you can see we got a little bit of a move, but not all that good. Where is it? Well, this one you can see an II pattern, and then we got a strong breakout above. This one in particular, you can see we got an inside bar on the open, and then it led to a strong trend day. So will some traders sell below bar five? Yeah, some traders will take the short. If they're taking the short, what they're hoping is that we basically get a big collapse down. You know that we probably won't, and the traders taking it know that we probably won't. But as you can see, if it leads to a big trend day, they're going to make a lot of money, and their risk is not all that big. So it is okay, I think, to sell below five and take a chance, but it's probably better just to wait, especially considering the statistics on the day where there's 75% chance of 2 hours of sideways to up trading. Probably better just to wait. Bar six, bear bar closing near, or not quite near its low, but closing strong and closing below the low of the day. The second attempt to break out of yesterday's low, and it is a breakout of yesterday's low. I was worried that it might be some sort of wedge, 78, 2, and 6. So I was concerned about the wedge, and I didn't really think it was all that likely we were going to go super far down. So I thought if we started to go down, we'd probably get some sort of reversal up. 7, follow through for the bears. So we have consecutive bear bars. They're pretty large, but there is tails on 6 and tails on 7. I am not personally going to sell down here. If this turns into a big bear trend day, I'll get short at some other time, but I would just let this initial spike go personally. These are not A+ trades selling below 6 and selling below 7. They're they're kind of okay, but you need to be really good at managing the trades. So it's really kind of difficult to take that sort of short. Bar 8 is more follow through. So we have 3 consecutive bear bars, bar 6, bar 7, and bar 8, but it's really not all that good. The risk is pretty large. We're really far from the moving average, and this whole move in general has been extremely climactic. So I'm really not all that convinced that we're going to go that much lower. This area, rather than taking the difficult sells and then exiting as traders are buying, it makes more sense to just wait and look for the buy. And then, if it never comes, then it never comes, and you can always get short later in the day. But in this area, I would be getting out of shorts and probably more looking to start to buy. So what do you need to buy? Well, pretty much any bull bar closing near its high is going to be credible. We're way oversold in terms of the past, I don't know, 30 or 30 to 40 bars. This whole thing, we're pretty oversold. This is very climactic, and we're getting a strong breakout below an area that was really climactic. And most likely it's going to be a trading range because 75% chance of 2 hours of sideways to up trading. So if it's going to be a trading range, what do you want to do when you're trading in a trading range? Well, you want to buy small bars near the bottom or sell small bars near the top. And this is a credible low of the trading range. And if it is the low of the trading range, it could be the low of the day as well, or at least the low of the next couple of hours. And if you're buying above 9, you're buying in the lower third, and you're buying with small risk. So everything that you need for this trade makes sense. I know it looks scary because it's a sell climax on the open, and you're thinking, I don't want to buy after 3 straight bear bars. But the context for this buy makes a lot of sense to take the buy above 9. Bar 10. So something interesting. One of the ways you can know that this trade was reasonably high probability. By reasonably high, I mean this is one of those trades that looks like 40% that ends up being more like 50% because the risk reward is really good and the probability was reasonable. And so on bar 10, basically 10 seconds into bar 10, the market was racing up. You really only had a couple of seconds to buy directly above bar 9. And if you did not get in, then you would have had to buy higher as 10 was forming. So when the market is, when there's really good risk reward in one direction, no one wants to sell above here because they see this, and traders are eager to buy above here because they know the math. So this becomes a strong trade, and that's why 10 moves so fast. So 10, a really big bull bar closing near its high. If you didn't buy above 9 or you didn't want to buy above 9, you wanted to wait for higher probability, then you can wait and just buy above bar 10. We have consecutive bull bars, 9 and 10. It's possible that we end up pulling back a little bit because 6, 7, and 8 are pretty strong, but I still think that the low of the day is in, or at least the low of the next couple of hours. What's your target? Well, your target could easily just be the high of the day. You could just go for that. That makes sense. If you really wanted to, you could argue that we have a very small, or we have a small day so far, 42 points. Now, is 42 points in general a small day? No, but yesterday was 100 points. So we're probably going to at least get a 70 to 80 point day. And you could go for some sort of measured move up, maybe based on the height of the whole day so far. So something up here. And even if you're buying here and the probability might not be as high that you're going to make 50 points, but you have 2-to-1 risk reward. So it's reasonable, even if it's a 40% chance, and it's probably higher than a 40% chance because we are expecting a bounce today. 11, more follow through for the bulls. So we have 3 straight bull bars. It's notable that we never overlapped with the 9 high. So the bulls who bought above bar 9, or the bulls who were trapped out above bar 9, they were never able to get back in at the bar 9 high because sometimes the market, let me explain that better. The market will retrace to swing points a lot. So, if a trader wants to buy above 9 after they see more follow through, then sometimes the market will come back down and you'll get a test of the breakout point, which is the bar 9 high in this case. However, we never got that today. So it was probably a little bit more bullish. How much higher are we going? Well, we'll probably get to at least when you see the close of bar 10, you should be thinking we're at least going to get to the bar 2 low because that's the breakout point of this triangle, the II. So the breakout below, we're probably going to at least close the gap because to me, this symbols we are not in a bear trend. We're in a trading range, and you expect gaps to close in trading ranges. So you should think we're going to at least get back to the bar 2 high. I'm actually want to see what we tested up here. Okay, we almost tested back to the bar 4 low from yesterday. Got close. But anyways, 11, 3 consecutive bull bars closing near their highs. The first target for the bulls, besides the bar 2 low, which has already been reached, would be the sell climax high. So I think the most recent sell climax, bars 6, 7, and 8, the 6 high would be a target for the bulls, and we might get some profit taking there. Additionally, bars 4 and 5, the inside pattern, we might test the apex of the triangle. The II is a triangle, so we might have to test the apex of it, which is exactly where the sell climax high is. 12, more follow through for the bulls. So we have 4 straight bull bars closing near their highs. 3 straight closing near their highs, and 12 doesn't quite close on or near its high, but there is a tail on the top and bottom of 12. At this point, you can see that 9 and 10 may have been the spike, and this is still strong for the bulls, but we did pull back on 11. So the fact that we pulled back on 11 tells you that on some lower time frame, this is a higher low. So on some other time frame, I don't know, let's do this. Spike, and then maybe channel. So let's make this pink. Okay, perfect. Go to a 2-minute chart. So you can see we got the spike and then the pullback immediately here. So you can see we pulled back, and that's what created that tail. And that tail is important because on this time frame, this is now a higher low. What does that mean? It means that once we start to rally, you're looking for a new place for your stop, because if your stop is below here, your risk is getting rather large. So we have consecutive strong bull closes here. It's probably okay to just pull your stop up to below 11 since it is a higher low on some time frame. And if we are going to rally, we did just get a strong close above the moving average, so we probably won't pull back to below this low if we're going to rally. Now, are you going to let the stop get hit? Probably not. I would say, if you get a really strong looking reversal down, you just get out. But I don't think traders, or I think it's okay for traders to have a stop below here as long as you can manage the trade properly. 13, more follow through for the bulls, but a big tail on the top and a big tail on the bottom. It's going more sideways here. Is it still by the close? Probably technically still by the close, but I'm not sure how worth it is. I'm not sure how much higher we're really going to go without starting to pull back first. We're towards the top of the trading range now, and it's probably still a trading range open since we have big down, big up, which usually will lead to confusion. 14, a bear bar, but there's a big tail, or there's a tail on the top and the bottom. It's not a very strong bar. You'd be selling against 5 straight bull closes, so there's really no reason to do something like that. It's a bad low one short for the bears. The bulls just see a pullback. A lot of them, we're in a profit-taking area up here, so you have to be expecting to hold through a pullback if you're going to hold through up here. Outside up bar on 15. 15 is kind of interesting. Sometimes this will end up being a second leg trap, and 16 will close on its low, and then we start to go sideways. So 15, the bears are hoping it's a second leg trap, and the bulls see outside up from the low 1, so they see some trapped bears, and they're hoping to trap the bears in who sell above the bar 14 high. 15, strong bull bar closing on its high. What are the odds that we get, a lot higher? I don't know. I mean, I thought this was pretty low probability with how big this rally ended up being. You can buy above 15. We're always in long, and it is by the close. But you have to wonder if we're in more of a trading range than a bull trend. I think 16 is almost a bit of a surprise for the bulls. I think if you're buying up here, it's more of a swing trade. You can probably just buy and put your stop directly below 15, because we shouldn't trade below 15 if your premise is valid, and your premise is that we are still in a bull trend. So it's probably okay to just buy above 15, put a stop below 15, go for 2 times your risk or something like that. Because like I said, if you're buying, your premise is this is still a strong bull trend, and if it is a strong bull trend, we are not going to fall below this higher low. So 16 consecutive bull bars. It closes above the bar 1 high, which is the breakout point for that. So that's strong for the bulls. We're probably going at least a little bit higher. And then 17 does something interesting. You can see the traders, you have to zoom in, but the traders who sold above the 1 high, just making sure I'm correct. Yeah, the traders who sold above the bar 1 high, so they shorted on a limit order as we traded above it, betting on a trading range open, which was a reasonable thing to do. And they were thinking, well, I can sell here, I'll probably be able to scale in higher, and I'll probably make money. And you can see on 17, it came back to the bar 1 high, but it never overlapped it, which means, if the market touches your entry price and does not go 1 tick past it, you're only going to get filled like 10 or 15% of the time. So you still have probably 80 to 90% of the bears who shorted are still trapped in on bar 17. So this is a problem, I think, for the bears that did not overlap on 17. It's three straight bull bars. We're probably going at least a little bit higher, but I think if I'm a bear, I'm not quite worried yet. I'm still expecting us to get back to the bar one high. And then we get another bull bar on 18. So we have four straight bull bars, 15, 16, 17, and 18. We're probably going to go at least a little bit higher, and you're expecting another leg sideways to up. However, this is getting pretty climactic. We're getting a little bit overbought in the short term. It doesn't mean we're going to go, doesn't mean we're going to stop going up. It doesn't mean we're going to go down. It means we might stop going up somewhat soon. And again, I think the question everybody's wondering right now is, are we going to get back to the bar one high? I think 19 is mostly just profit taking from the bulls. Again, we're a little bit overbought here in general, and I thought if we were going to continue to rally, that we would probably pull back first. It's not worth selling below 19. It's a big low too, but the channel up is extremely tight. So we're probably not going very far below 19, even if we do go below 19. Do you have to exit longs? Well, you definitely don't have to exit longs, but because there's four straight bull bars, we're going to get a second leg sideways to up. But if you're long for any reason, you probably have a reasonably decent profit. So some traders might take a part off. And you can see it traded just below 19 and trapped traders out. And then it reversed back up on 20. Bar 20 is a high one. It's possibly a third leg up for the bulls. The first leg to bar 11, the first leg to bar 13, second leg to bar 18, and then maybe some sort of third leg up. It's probably not worth doing anything. And then we get bar 21. If I'm long for any reason, I would just exit on the close of 21. In general, what you should be doing on this day, once you see 21, is you say, okay, probably going to go sideways to down for a couple of hours, and then you look for some sort of second leg up. Why are you looking for a second leg up? Because this whole thing is a breakout on a higher time frame. So if you look at like a 15-minute chart, it's a pretty strong breakout to the upside. So it's going to get a second leg up. I was surprised at how quickly we started the second leg up. But in general, you have to be expecting a second leg up from this whole move. We will probably test back to the bar 21 close at some point today. Bar 22, a doji bar, probably not worth doing anything. Again, I think that the traders, if anyone bought above 21 and you see 22, you bought above 21 taking a chance that this already really climactic move was going to get even more climactic. There's probably only, 40% chance of that happening, and your risk is really large. So it's really not worth doing. And if you're buying and you see 22, now your odds have dropped even more. So the traders who are doing that, they see that and they're immediately getting out, and that's part of what's causing 23. 22 is also a parabolic wedge. So you have a buy climax and you have a parabolic wedge, but it's a doji bar, and most traders do not want to sell below a doji bar. 23, a bear bar, but a big tail on the bottom. Again, to me, I think we're probably going to get a couple legs sideways to down. What are we going to test? I don't know. We'll probably test the buy climax low. So the bar 21 low is one of the possible targets for the bears. So 23, a big tail on the bottom, probably going at least a little bit lower, probably going to test at least the bar 19 high. 24, a second bar down, possibly two legs sideways to down on a lower time frame. So you can see we got the first leg down. For the record, I thought that 22 through 28 was a first complex leg down. Then we started to pull back, and I thought we were going to get the second complex leg down, and then maybe some sort of midday reversal to the upside. Obviously, that did not happen today. This is one of those days where we happen to get a breakout to the upside and then an endless pullback. But yeah, that's what I thought was going to happen. 25, another reversal up. So we have three tails, 23, 24, 25, means three reversals up on a lower time frame. So possibly some sort of wedge on a smaller time frame. But again, I don't think it's worth doing anything right now. I would just rather wait. 26, an inside bar closing near its high. It's a high one for the bulls, but I'm not taking it. Again, if you're taking that, you probably have to have a wide stop. I don't even think below 20 is going to cut it. I think if you're going to buy, probably just put a stop below 15 and look to scale in on later entries as well. But it's really, really unlikely we're just going to get some sort of rally immediately from bar 26. So I would just rather wait. 27, you can see bulls were more willing to buy below the high one than they were above the high one. So probably going to go, at least a little bit lower, I think, but I'm not sure how much. It's again, this is looking like a pullback and a minor reversal. It doesn't look like we're about to start some sort of bear trend. 28, an inside bar, a bear bar closing near its low, but it's not worth selling. It's a bad low one short. Again, to me, this is just a trading range at this point, and I am going to wait before buying again. 29 triggers the high 2 above 28, or you could argue it's a high 1 since we never traded above anything. It was a micro channel down from 22 to 28. But I think, we got a clear reversal attempt up on 25, 26. So to me, I look at it as a high 2, but not worth buying above a bear bar. And then 29, a bull bar, but a tail, and it does not close above the bar 28 high. It closes at the bar 28 high, which is disappointing. 30 consecutive bull bars closing near their highs, but 29 overlaps 30 a lot with the tail on 30. I would not personally buy the close of 30. You can do it and take a chance that we break out to the upside like we did today. But for me, I don't think that's, that's not one of the better trades today. It's fine, you can do it, but again, I just don't think it's one of the best trades today. So if you're going to do that, you can't be all that surprised when you end up getting, bars like 32. Bear surprises oftentimes happen in these types of contexts. 31, so 3 consecutive bull bars, 29, 30, 31. We're probably going a little bit higher. We're probably going to a new high. The fact that we got a 3rd consecutive bull bar is really important because usually if this is going to be a bull trap, you're not going to get a 3rd consecutive bull bar. But instead, we have 3 straight bull bars closing on or near their highs. And then you can see 32 trades below 31. So there are buyers below 31 during 32, scaling in lower, maybe buying more around a 50% pullback, which is probably a big piece of what's causing this large tail on bar 32. You would imagine bulls would have been looking to buy around a 50% pullback, but we went even a little bit further than that. But this is the general area where bulls should be buying. And then, to me, when I see this, what's probably going to happen is the bulls who bought the close of 31 are going to see 32 and they're going to say, oh, I screwed up. This is not what should have happened. I got a big bear bar here. I really don't want to be in this trade anymore. And they would exit, and this would cause us to get that. This is your first leg down and then a second leg down. It's important that we got these 3 strong bull bars, which I thought was interesting. I thought it made it a little less likely that was going to happen. But even still, I thought that it was more likely the bulls were going to sell by their longs up here rather than buy more. And today was one of those days where we got a bull surprise on 33 and the bulls bought more. 33 probably should not have happened. It was an unusual bar. Again, like I said, in general, there's going to probably be more selling up here. And then instead, you get a bull bar closing near its high 33, and we have open gaps. So am I buying above 33? Sure, you can definitely take the buy above 33. It's a bull surprise. You're taking a chance that the bears stay trapped, which they did for a little while. The bears who sold above the breakout on the 22 high, you can see they weren't ever able to scale in and make money until over here. So it was possible that they got trapped, and then with this bull trend day just continued. So we have open gaps over here, and we have open gaps here. Is this going to be a bull trend day the whole day? I don't know, because keep in mind that we got this. So as strong as this is, it's probably a leg in this trading range. And again, looking at a higher time frame, it's important to not get hypnotized by what's going on. Just looking at the hourly chart, this is what we're getting. And it's pretty strong, but this is stronger. So it makes me think that, the first reversal up is probably going to be minor. I don't, we can still go higher, don't get me wrong, but to me, this whole thing was starting to just seem like a trading range. 34 consecutive bull bars closing near their highs. Again, bull surprise. It's okay to be buying up here, but I'd probably just be looking for like a 10-point scalp or something if I was taking these buys. It's not really worth, I think, holding for a huge swing because you're probably not going to get it. 35, more follow through. So sorry, that was 34. And then 35, more follow through for the bulls. 3 more straight bull bars. Here we got 3 bull bars. Disappointment. We might get 3 bull bars and then something disappointing. So good for the bulls. We might go a little bit higher, but again, we're getting towards the middle of the day and we're probably going to have to start to go sideways pretty soon. This is too steep to last all day. The odds of us just continuing to do this for another 40 bars are really low. So at this point, I'm not really all that interested in buying. I think I'd rather wait. We have an inside bar on 36. So it's a high 1 buy for the bulls, but there's a tail on the top. High 1s usually lead to deeper pullbacks and then trend resumption. So I think that's probably what's going to happen. An outside bar on 37 triggers the high 1 for the bulls, but I'm not really willing to buy up here. There's nothing to sell. Bears haven't done pretty much anything so far today. Basically, if you're looking to sell, you're looking to sell a failed breakout above a final flag and then a reversal down for a couple legs sideways to down. We got the final flag, and we got the failed breakout above the final flag, and we got the bear bar closing near its low, which you can sell 45. It's probably one of the better trades on the day. It's the best trade for the bears all day, but it's one of the better trades on the day. But you can't, you're probably expecting a couple legs sideways to down. I thought, well, let me get there first. So 38, an inside bar. So it's an IOI pattern, 36, 37, 38, which is a type of final flag. Breakout modes and final flags are kind of interchangeable. It's just that when you're deciding to use the term, if you're using the term final flag, it means that you're at the end of a bear trend. So if you say final flag here, end of a bear trend in II, this is a final flag. Yes, it's breakout mode, but for the bears, it's a final flag. So if we start to go lower, it might be a failed breakout below said final flag and reversal. Here, it's a final flag and reversal. And had we gotten a tight trading range in here, it wouldn't really be a final flag for anybody. It would probably just be a tight trading range. So the language is dependent on the context. But if you look at what final flags are, they're oftentimes the same patterns you see in breakout mode. It just depends on where you're seeing them, determines how you're going to what you're going to call it. So an IOI pattern, to me, this is a final flag. Breakout attempt above on 39, but it's really pretty weak. There's a big tail on the top. Bulls need to do a lot more if they want to convince traders to buy up here. And a lot of traders just won't. If it goes, then they'll just let it go because this is pretty overdone. 40, probably buyers below 39, scaling and lower. But again, I'm expecting us to get a couple of legs sideways to down pretty soon here. 41, disappointing follow through for 40. Bears were hoping to start a couple legs sideways to down. Where do I think we're going to go? I don't know. We're probably going to fill in this gap, I would imagine. So you have to start thinking in this area when you see the final flag. You probably have to start thinking trading range, and you have to start wondering where the bottom of the trading range is going to be. The top of the trading range will become rather obvious when we get it. Obviously on 45, it became pretty clear that this was going to be the top of the trading range. But the question is, where's the bottom going to be? I thought it was potentially going to be the 22 high. However, I also thought that we were supposed to go sideways in here. We should have, and instead we didn't. So it made me think that we might have to test back into this area. So I thought the trading range could come all the way back down into this area. However, this is still a pretty tight channel up. So if you're selling 45, it's still a minor reversal. 42, follow through for the high one on 41, but it's really not a very good buy on 41. It's a bear bar. 43, more follow through for the bulls, but a big tail on the top. Again, I'm not willing to buy up here. And a bull bar closing near its high 44, but this just looks like a vacuum test. We have a big tail 42, a big tail 43, and a final flag here. So you're getting a breakout attempt above a final flag, and you don't even have consecutive bull bars closing on their highs or near their highs. So it's really not worth taking it up here. And then you get a big outside down bar, reversal down 45, bear bar closing near its low. It's a wedge top, so we had the spike, the parabolic wedge up to bar 21, and then we started a channel. The channel, the 22 high, the 35 high, and the 45 high. So we have a wedge channel to the bar 45 high. You can expect the correction probably to be about half as many bars as the channel. So you have a 24 bar channel. You can generally expect, 2 legs sideways to down, 2 legs, 10 bars. So it's reasonable to sell below 45, looking for, 10, 15 points, something like that. But this is unusual. This is an endless pullback, and endless pullbacks are not all that common. So wedge, outside bar, closing near its low. You can sell 45, and you get good follow through on 46. 46 is a bit of a surprise for the bears. It's good. We're going to get a second leg sideways to down. So even if we get some sort of pullback, some sort of bull bar on 47, that it's going to be a minor reversal up. 45 and 46 is strong enough for a second leg sideways to down. And the context, like I mentioned, is also calling for 2 legs sideways to down. So either way, you're probably expecting us to go at least a little bit lower. And then you get a strong bear bar closing near its low 47. We have 3 straight bear bars closing near their lows, which is, I think, pretty unusual in this context. Usually, you're going to get some sort of more minor looking reversal, a couple legs sideways to down, and have to find a way to get out pretty low. And instead, you have 3 really strong bear bars. So we're probably going lower. How much lower? I don't know. I mean, it's not like this overrides this, but it's still very good looking for the bears. I'm actually curious to see what the context of this looks like on a 15-minute chart. So just let me sidetrack for a second. Okay, so never mind, it didn't close on that bar. But either way, bear surprise. So 3 straight bear bars closing near their lows. It's good for the bears. We're probably going at least a little bit lower. Disappointing follow through on 48. Why is there disappointing follow through? Because the risk is big. 45, 46, 47. As strong as this is, it's probably still some sort of leg in a trading range. So I'm not sure that it makes a lot of sense to be um, selling below 47 if you're going to get out on a minor reversal up. If you're selling the close down here, you probably are going to have to scale in at some point. Something to note is the close of 44 was a pretty strong close. So I think that we'll probably end up getting some sort of reversal back up today. I was wrong, or it didn't end up happening today. But in general, had we started to go more sideways here and gotten a good looking bull bar, you could buy with a 60% chance we get back up into this area. Obviously, we didn't really get anything credible until 70, and even that wasn't all that great. And so you would hope that we would get back to the midpoint of these two buys, but we were never able to get there. So really not really kind of surprising to me that we weren't able to get some sort of, or at least, reasonable looking reversal attempt. But again, the first hint that that's not going to happen is how strong 45 through 47 is. 48, buyers below 48 during 47, or sorry, buyers below 49 during 48. Again, could just be a second leg down for the bears, but we're probably going to get a little bit more of a second leg down. 50, an inside bar, a bull bar closing near its high, but you're not buying. This is way too strong, so it's not worth buying the first reversal up. I would wait for the market to go sideways for a little while and then maybe look to take something. 51, trading a little bit above, but it's a low, I suppose it's a low 2 short for the bears, or low 1 short, whatever you want to call it, but it's a bull bar and it's not really worth selling. Do you buy below? I don't know. This is pretty strong. It seems like the context isn't all that great. Again, we were always in short coming into the day, and we flipped to always in long, probably 10, 11, and now we're back to always in short. So I don't really want to be scaling in against the always in direction. 52, a bear bar, but a tail on the top. Breakout attempt below this low, but a big tail. We're probably getting back to at least the bar 51 low. Why? Because there are some algorithms that will do that and scale in, but it's just not probably the best idea for an individual trader. It's just really not one of the better trades. It's not like buying below 31 where you just had 3 strong bull bars. There's going to be buyers below here scaling in lower. It's a bit different than that, and it's so not really that good. 53, a bear bar, but a tail on the top. There's probably sellers above 53. That's probably a more reasonable trade. And if 54 closes on tie, you can always just exit. So you can see there were sellers above 53 during 54. We're trying to form some sort of trend line here, and you can see 55. You could argue it's some sort of wedge, 1, 2, 3, and then 55, a big bear bar closing near its low. Do you sell the close of 55? You probably can. If you do, you have to understand you're betting on an endless pullback, and you're betting on the breakout below this channel working. So I'm not sure how high probability it is, but you can definitely take the short and look to at least get back into this area. And if you're lucky, we'll close the gap with this high, the 1 and the 17, the bar 1 and bar 17 high gap. Why that gap? Because bears, if you're betting this is a trading range basically, and you don't know where the trading range is going to be, the bottom is going to be. It's clear this is the top of the trading range. However, it's interesting that let me gather my thoughts for a second. Hold on. The fact that this is so steep and this is so large hints towards this overall being a trading range. So we could close the gap with this high. I wasn't all that convinced we were going to do it, but that is a logical thing to think. 56, consecutive bear bars closing near their lows. It's sell to close 55, 56. I'm probably going at least a little bit lower. No reversal in sight, and the channel down is really, really tight. So I'm not really sure what else is going to happen here for the bulls. Again, if I'm going to buy, I need a really strong looking second reversal up at this point, or some sort of clear bear trap. 57, a doji bar. So disappointing, I think, for both sides to get a doji bar here. It's still follow through for the bears, but to me, it says that the sell to close is going to come to an end pretty soon. And the bulls, they want some sort of bear trap, but it doesn't look like they're getting it. 58, a bull bar, but not able to close on or near its high, and not really worth selling below the doji bar, obviously. So buyers below, but no one wants to buy after the consecutive bear bars when we don't get an immediate trap. And then 59, a big bear bar closing near its low. But again, this just looks like a second leg down from 55, 56. I'm not really willing to do anything. At this point in the day, I decided, I was not willing to sell. The only sell that I thought was good, like really trade of the day quality, was 45. You could sell these, but I don't know. The risk gets big. I don't think 55 is trade of the day quality. And so at this point in the day, the only thing I was willing to do is if we got a credible bounce and then a second reversal up and that buying low in the channel, if I could do, or buying low in the trading range. So let's say that 62 happened and was a little bigger and went to a new low and then got bought back up. And then 63 was a bull bar closing near its high. It's a tight channel down, but this was a tight channel up. So this should get a second leg. So I would have been willing to buy and go for the midpoint. But at a certain point, you kind of got to ask yourself, why are the bulls not getting the reversal up? And it gets less and less likely that we're going to get back in the midpoint of these areas. 60, disappointment. I think it was basically just bears buying back shorts with the big second leg down. And again, we're back in that area of 21 through 27 where we probably should have started to go sideways. So I think that we're probably reached the bottom of the trading range. 61, a bull bar closing near its high, but it's not worth buying. It's a nested second leg trap. We're up on 60, down on 60, up on 61. It's 2 legs up. And this is the tight trading range. You don't want to buy high in the tight trading range. You want to buy lower in the tight trading range. So 62, disappointment, a big tail on the top, or sorry, a big tail on the bottom because no one really wants to sell below the bull bar. Bulls here are looking for a credible reversal up, and instead you get a bear bar closing near its low 63. Really disappointing. I think if I was a bull, I'm starting to give up on the idea that we're going to get a reversal up, and that's probably what's causing 64. Do you sell the close of 64? I would not. It is sell the close 63 and technically 64, but to me, this is a channel. This is a tight channel down. We're getting a breakout below the channel 64, and we're probably getting into the buy zone. We're definitely in the middle to lower third of the day. 64, basically a few ticks away from the lower third. So I'm not really sure that I want to short down here. I would rather wait. 64 looks like more of a place to take profits. 65, disappointing bar. Would still follow through, but there's a big tail. If I short it for any reason, I'm probably just going to get out of the market or get out above any bar. And 66 is a bar and it's a bull bar. I would get out above 66. You don't really know how much more we're going to get to the downside here. This is pretty overextended. And in general, when you have a channel, I think it's like 75% of the time, when you have a channel and you break below the channel, 75% chance you're going to get a reversal up within 5 bars and try to test the other side of the channel, which we did. So sellers above 66 during 67. But again, I think we're probably going to end up getting some sort of, at least a little bit of a bounce. I'm probably done selling. 68, an inside bar, but there's going to be buyers below 3 straight bull bars, but we're still always in short. And then you get buyers below and a reversal up 69. The bull bar closing near its high 70, but after 4 not all that great bull bars, there just wasn't enough urgency to be taking these buys. So it's better to just, you can buy above 70. It's a credible thing to do. And hope we continue to rally, but I would just rather wait. I would probably just be done for the day at this point. 71, a bull bar, but it's too big and it doesn't close on its high, so it's disappointing. And 72, we rallied back to the most recent sell climax high. You can make an argument the most recent sell climax was just bar 64 itself, but with 4 straight bear bars, I think it's reasonable to also consider the fact that the bar 62 high was a sell climax high. You can see we traded above 61 and trapped in some bulls. And so those bulls are scaling in, and if you bought above 61 and used a really wide stop and you scaled in, you would have made money on bar 72 because it gets back to your entry price of your first entry, and you'd have a profit on your scale-in. So to me, that hints that we're probably just going to be in a trading range the remainder of the day. And then we ended up basically getting a surprise back down towards the low of the day. It was possible that we were testing the bar 8 close since the bears who sold the close of bar 8 and they scaled in. This became a trading range. They were able to get out, but that's not worth betting on. It's just probably what we were trying to test. For stop orders today, I thought, maybe you could sell below 6, but I would rather wait and then just probably look to buy above 9 or 10 or 11. You could buy above 15, probably stop below. 16 by the close. It's by the close up through 18, but climactic. I would not buy 21, parabolic wedge. A few legs sideways to down, and we don't quite get back. We didn't quite go sideways long enough for me to be interested in buying 30 or 31. So you can buy 30, but I just think I would personally rather wait. It's not my favorite trade. 33 by the close, bull surprise. 34, and then IOI. So final flag, breakout mode. I would not look to buy anything up here past that unless it's really, really strong. But again, even then, I would probably just let it go. It's pretty rare that we're going to get a day that that's this climactic and just goes all day. So you'd rather trade the thing that's most likely to happen, which is that we're going to end up getting some sort of trading range. 45, a bear bar closing near its low, wedge. So you can definitely sell 45 for a few legs sideways to down. And you end up getting pretty good follow through 46, 47. It's okay to probably swing a piece. Where do you get out? You probably don't have to get out above 50, and you could sell 55. You really probably, I'd probably get out above 61 at that point, but probably still a minor reversal. You could sell again 63, but I would rather not. And 64 is climactic. You could buy above 70, but it's not really all that great. I thought the best trades on the day were 9, 10, and 45. You took, it's kind of interesting because if you only take it's really everyone wants to take trades, but if you really just focus on taking one or two trades a day, you'll probably end up doing a lot better. And it's really difficult when you lose those trades and then you end up, revenge trading. But it's probably just smarter to take one or two trades a day and be good with that. The best limit order trades on the day I'm probably going to start trying to do a little bit more talking about what I think the best limit order trade or two on the day was. But buying below 31 made the most sense, I think, of any limit order trade today. Um, you would not buy below 44 because of the wedge. And if you did, you get out below 45 for sure. Probably sell. And there's probably sellers above 53. I think those two made sense, but everything else I'd probably is not maybe the best. The daily chart, this is obviously a problem for the bulls. This is a really tight channel down. Again, I think we're getting into this gap, this January or June 7th gap. And do we go straight there? There is the reality that if I was a bull and I want to buy, why would I buy here when I know I'm probably going to get to buy here? So it's possible we just get a vacuum test down to this area a little bit below 5,400. Maybe tomorrow, I don't know. But, considering that we've had multiple days in a row that are basically close to 100 points, it wouldn't surprise me if we got a day that was basically a 50-point sell-off, right? If we gap down to this tomorrow, it's occasionally you'll do something like that. But if we gap down to this tomorrow, I would be looking for a reversal up pretty quickly in a pretty strong bounce from this low. This is overlapping a lot with, and if you think about it, when I mention overlap on bars, so you look at this bar and pretend it's like a 5-minute chart, and you look at this bar and you say, well, it's still consecutive bear bars. I know there's overlap, but it's still consecutive bear bars. Think about the lower time frame. Think about what's actually going on. This is what actually went on. Does this look like a strong bear trend to you, or does this look like a trading range? It looks like a trading range. So when you see this bar, it's more of a trading range bar. It's not really as much of a strong bear trend bar. The weekly chart, really strong for the bears. Bears want this bar to close on its low, basically. Come on, thing. Bears want this bar to close on its low and probably start to move back down to the 5,000 area, though we're not going to go straight there. It's going to take a few legs and probably a few months. And the monthly chart. If the monthly chart, there's only about a week left in the month. There's I think it's like 4 trading days. And this is good for the bears. So if they can get this bar to close on its low, I think this is a big problem for the bulls. And the question becomes, where is the low of the trading range? I mentioned, if any of you were watching last October, I mentioned that, it was odd that we got 3 straight bars, 3 straight bear bars, and then we rallied so strong above it. So I thought that this was probably the start of the trading range. Obviously, it might have been wrong. I don't think we're getting back to this area, but that would be a pretty large sell-off from the high. Probably too much. Yeah, that would be too much. But, I think we're definitely getting back to 5,000 at this point. So I would not be surprised at all if we get correct back into the 5,000 area, which would be, 12, 13%, but we've gone up so much that you'd be giving back just a piece of what most traders have earned this year with how much we've been up.